Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about Rocket Mortgage, ticker symbol RKT. They just came out with their Q1 2021 earnings and they had a huge dip in their stock price, so I want to talk about that. If you're new to the channel, please consider subscribing. I do videos on stock analysis, investing, or general personal finance. Also like the video at any time if you find it helpful. Now back to the content. So Rocket Companies had their 2021 Q1 results just a little while ago, and immediately in the aftermarket, they're already down a little around 13%, down to $19.75 a share. You can see the huge drop in price post, in after hours. So let's look at those Q1 results and see what happened. So the analyst estimates on earnings per share was at 30 cents. It came in at 29 cents, so they missed by 1 penny. And then on the revenue side, they missed by 204 million. Analysts were estimating 4.28 billion, and they came in at 4.04 billion. All right, so RKT missed by 4% on revenue and like minute number on earnings per share. So why did their stock price go down? I think it's a little bit overblown, and I want to go through a pros versus cons list to kind of go through why I think that is. All right, so first up, I want to talk about the huge increase in net income. Now, if we look at the difference between Q1 of 2020 versus the Q1 of 2021, if we look at total net revenue, you can see that's increased by about $3 billion. You can look at net income. That's almost the exact same margin. Again, huge increase there. They're saying that's up to 28 times. If you look at adjusted net income, the third circle on the left panel, that's up to roughly 1.8 billion, up over 170% year over year. So incredible growth there. Again, this is huge for a stock that has a market cap of what? Like it's 40 something billion, $46 billion. Yeah, that's incredible. The multiple right now is at 13 P/E. So I still think this is a really great stock. This is going to be a really good chance to buy the dip if you don't already own RKT. So if you find this video helpful, please hit that thumbs up button. It helps me out a ton. Now back to the content. Moving on to my next point, which is low rates. If we look on here, interest rates are expected to be between 0 and 0.25% through at least 2023. As Low Right has said, Shoddy got low. And I don't expect interest rates to get any higher. Now, are mortgage rates or refinance rates tied directly to the Fed? No, but they do definitely set the bar. And if they're not expected to rise, I don't expect that to change much. And with all this money flowing with all this stimulus money still sitting in the economy, I still think people are going to still be refinancing. And again, the market is super hot right now. So let's talk about that. Now, the market is hot. People are buying houses for incredible amounts of money right now. And, just in my neighborhood alone, home values are up over 20% year over year. So again, I think people are going to continue buying. People are seeing houses and they're either refinancing their house to capture these all-time lows, or they're going out, they're selling their current house and they're going out and buying a new one because they're like, I can't believe my house is worth this much. So I think this is all good things for RKT, especially in the short term. But I think just their platform alone definitely has some long-term potential on it, especially with their recent increases in revenue. That's an incredible amount of increase in revenue year over year, and net income. I really, really do like that. So if you annualize that, that'd be nearly $8 billion in net income, and on a company that has a $46 billion market cap. So that's crazy. That's incredibly, in my opinion, I feel like that's just an insanely low ratio. Next up, I want to talk about on the pro side, $1 billion in stock buybacks. Now, this is I would say, relatively minute point, but still, it's still going to add value to existing shareholders over the course of the buyback period. So again, another good reason why you should hold on to RKT if you own it, or if you don't own it, now is a great buying opportunity. Now on the con side, rising interest rates. Now I already touched on that the Fed's not going to do that for probably another year and a half, 2 years. But seriously, like, if interest rates start to rise, I guarantee you it's going to put a fire under people to start refinancing before rates get too high, or people are going to start going out and buying before rates get too high just to try to get something before they're priced out of the market. So I think these are good things for RKT, whether it's on the pros or con side. So on the con side, it's far out. Like a year and a half is way too far out to be, ringing the red, the white flag and being like, oh, RKT's over. It's not. It's going to be a long-term play. It's taking more market share. Its loan volumes are up incredible. If you look at its loan origination from Q1 of last year to Q1 of this year, it's up over 100% on origination volumes, and the net rate lock volume is up 70%. So again, really, really good, strong numbers there. And the last thing, lower loan volumes. Now, this may be true, but I think this has more to do with the amount of new home purchases and existing home purchases, and also with refinancing. So this could potentially put the company under, but not under. It could draw the company lower, but my inclination is that those loan origination volumes will continue to stay high, especially as stimulus money continues to roll in. Again, I think RKT is an incredible opportunity for some growth in the future, as well as short term as well. So, those are my pros and cons list. Again, huge increase in net income. Fed's not planning to lower or increase rates for till 2023. The $1 billion stock buyback will definitely help the stock price in the short term, and the cons. Again, rising interest rates, not that big a deal. Lower loan volumes, that's a concern. That's a legit concern. However, I don't think it's going to be a big enough impact, especially as RKT continues to gain market share in the origination space inside of mortgage volume. So again, RKT is an incredible opportunity. I think at $19 or anywhere under $21, they're an incredible buy. So that's my opinion. I'm not giving us, my stock price for this is, it could be, anywhere from $25 to $30 by the end of the year. In the next 12 months. So again, I had to make this video because of the huge decrease in price for RKT after today's earnings. I just don't think it's warranted. I think people are throwing the white flag up way too early. Please consider subscribing, like the video if you find it helpful. Let me know down in the comments what you think about RKT. Thank you so much for watching today's video. Frank Finance, out.